Right now, we're joined by Zach Shefska. He is the co-founder of CarEdge.com. It's a company that helps consumers with buying and selling a car. Zach, thanks for being here tonight. We appreciate your time.
Absolutely, Scott. Thrilled to be here.
So let me ask you, you are saying, I saw you all over the news now, that used car prices are beginning to drop.
Yeah, so we track this data every single week, and we help hundreds of people buy and sell cars, like you said. So we have a pretty good pulse on what's going on in the market. And yes, after 2 years, 18 months, 2 years worth of wholesale and retail used car prices skyrocketing, we are finally starting to see them fall back to earth, and pretty quickly, I might add.
Now, why is that? Why on used cars, and are they dropping on new vehicles as well?
So let's start with the new comment. It's interesting. Actual average transaction prices for new vehicles continue to rise. The average transaction price for a new vehicle in December was actually $49,500. Kind of hard to imagine. The reason that those vehicle prices are continuing to go up is because MSRPs are going up. Manufacturers have cut out their entry-level trims, and that means that you're seeing more expensive vehicles. For example, Scott, the Ford F-150, America's favorite truck, the average transaction price for the 75,000 F-150s that sold in December, a shocking $66,400. So, are new car prices going down? Not so much. They are more negotiable because there's more supply and less demand. However, average transaction prices are high because the MSRPs are higher. On the used car side of things, we are simply seeing a phenomena of what goes up must come down. For decades, we have never seen used car prices appreciate. For 18 months, we saw that happen because of the new car supply shortages. We're just seeing a reversion to mean. Used car prices are going to return to some sort of new normal, a new normal that's impacted by some aspect of inflation. So, for example, we saw used car wholesale values go up over 50% over that 18-month period starting in 2021. So far, as for 2022, they dropped about 22%. So, we're making our way back to how cars are typically valued in our economy, which is they depreciate.
Tell me about supply and demand also right now, Zach. And also, is this a regional effect also? Maybe the north is different than cars down in the south versus out west?
Sure. So on the supply side, we have seen a rebound that is, you remember the beginning of the pandemic, Scott, everyone was talking about the V-shaped recovery. We are seeing the V-shaped recovery in auto inventories. At pre-pandemic, new car inventories were about 3 million, a little over 3 million vehicles in dealer inventories. At the height of the new car shortage, we were down to about 750,000 vehicles in dealer inventories. We are now up to 1.8 million. It's about a 66% jump year over year in new car inventories. On the used car side, we are actually at pre-pandemic levels of used car inventories. That's great news. The tricky thing is there's not a lot of cheap used car inventory out there. And also on the used car side, unfortunately, we are seeing some regional impacts. There are certain states and regions where used car prices are simply higher. Regions that were impacted by hurricanes, for example, you're going to see even more demand for vehicles and not a lot of great supply. And even on the new car side, we see DMAs, dealer marketing areas, that have an influx of supply. For example, if you're in the Detroit metro area, there's a lot of GM products, Stellantis product, and Ford product. If you're in South Florida, good luck finding a Toyota RAV4 Prime. So there are regional things happening, but generally the trends are positive, and we couldn't say that for 18 to 24 months. The only good thing we could say in the past was that your trade-in value was going up. And to be very clear, your trade-in value has tanked, unfortunately. The time to sell was yesterday, not tomorrow.
Right. So let me. So what should the average consumer who's watching this right now, that's going out to buy a used car, not a new car, what should they do when they go to the dealers?
There's a couple things that you need to keep in mind. If you're buying a used vehicle, the first thing you need to know is how long that vehicle has been sitting on a dealer's lot. And the reason I share that with you is because the longer a vehicle has been sitting, the more likely a dealer will be to negotiate on the price. And if you think about it, the dealer used to be able to go to the auction and sell that used car and still make some money. Well, now that wholesale values and retail values are dropping, they're incentivized to sell it to a retail customer. And the longer a vehicle sits, the more it costs the dealer in what's called floor plan. Most dealerships finance their vehicles, so they're paying interest just like you or I would. So know how long a vehicle has been on a dealer's lot and feel comfortable negotiating what's called the out-the-door price. So Scott, that means, all the fees, all the taxes, all the add-ons they want to add. You're negotiating that price. And you can arm yourself with more information than ever before by going on the internet. Obviously, I started a company called Car Edge with my dad to try and inform people and provide information. So definitely do your research. And the final tidbit, any used vehicle, pre-purchase inspection. The quality of used cars on the road right now, very sketchy. We have seen a lot of behaviors, a lot of activities during the past 18, 24 months that unscrupulous dealers, unscrupulous private parties selling vehicles that desperately needed an inspection beforehand get a pre-purchase inspection.
Different promotions from some of these larger car companies on new vehicles as well?
We are finally starting to see a little bit of incentives make their way back. Pre-pandemic, might be hard to believe this, but about 10% of a vehicle's price was made up in incentives. So the manufacturer would spend about 10% to incentivize the purchase of a vehicle. So on a $60,000 vehicle, the average incentive spend was about $6,000. Last month, it ticked back up, Scott, from 2% to 2.7%. So in November, it was about 2% was what manufacturers were spending on incentives. In December, it ticked up to 2.7%. We are seeing some brands, for example, I mentioned, domestic brands. If you're looking at a Stellantis product, like a Dodge or a Ram pickup truck, there's good incentives there. If you're looking for incentives from Toyota, they're going to be few and far between.
Zach Shefska, the co-founder of CarEdge.com. Zach, thanks so much for your time tonight. We appreciate it.
I learned it all from my dad, Scott. Thanks for having me.